Welcome to the Times of Industry Show. I have incredible guests for everyone today. Patrick Karim, Bad Charts One on Twitter, an incredible technical analysis chart plotter that is specializing on gold and silver. And what got my attention on Patrick is he did an interview a month ago and 2 weeks ago on YouTube, and he was talking about the verge of breakout, etc. And it's amazing what has happened in the last 2 weeks. So I want to know what the charts are saying. Are they still constructive? Is there more risk? Where's the sentiment? Patrick, thank you for being on the show.
Thank you very much for having me. I really appreciate it. It's been a wild ride there the past few weeks. Honestly, when I did that last interview, I already did a ton of charts. It was building up to that. Um, it was screaming for me like something's gonna break for silver. Gold already paved the way a little while back, and from what I've studied previously in all the bull markets, gold, the metal itself, is like the first one to go out, and after that, there's always a lag, 6 months to 1 year. Then the silver joins the party. I don't know why, but like I try not to put too many reasons why the charts move a certain way, since I just like the chart's telling me a story. And it's usually like in hindsight, we usually have stories, to fill out. Oh, the chart went up because uh, China did this or USA did that. But that's like more type headline stuff, and it doesn't really like help me trade. It's more like noise. So you look at the chart, and then silver was like coiled, and it was just like just about to go. And right before I did that interview, I think a few days after, it just like skyrocketed. It just broke out. Just the timing could have taken maybe another month, but the timing just happened that silver unfolded pretty much like the technical analysis that we saw. And with technical analysis, we can't tell the future, but our job is to establish probabilities on possible moves. So you look at the higher trend, you try to see on a monthly chart, like let's say 1 year moving average, is it inclining? Well, right there, you know that's the direction you should be looking at. And after that, you could look at patterns, you see your different techniques, and then you could start pinpointing, okay, there's a confluence of charts that are telling you the same story. Everything's starting to match. All the levers that were moving at different speeds, they all start aligning. And then that's when you have high probability of that possible income of a move up. You never know like how fast or how high it's going to go, but that's what we want to play, right? We want to play a trend. You want to get in close to the bottom where it's cheap, and you want to ride it with its momentum going up. And like I said, like when your dad asks you to buy gold, usually that's a sign there that you might be heading into a correction or a top. And that's how it pretty much unfolded in the past weeks. What could I tell you? Well, what's the next step right now? I know it reached so fast. Now we're at like at 22, 23, where we're hitting some resistance. The long-term picture hasn't changed, Lior. It's still silver. By the end of this year or early next year, we're going to hit that $31 price. It's yearly defined resistance from all the way back from the 70s to the 2011s. We're really heading there. That's like sometimes on Twitter, I get feedback, where's the correction? Where's the pullback? But people that have to take a step back and always try to frame it. What time frame are you dealing with? Because or else, arguments, they always start because people, they're not on the same wavelength, right? What's your time frame? Are you a position trader? Are you buying to hold and not worry about 20 or 15% dropbacks? Then you have nothing to worry about. It's still everything, the macro, the chart's still going up. But then after that, you talk to traders, and then they want to keep 3 weeks, a couple of days, and then for them it's like really important that that timing. But that's really hard. So you gotta, if somebody tells you that they want to trade long term, then they have to look at monthly charts, higher time frame charts. For the short term, every time you go on the short term, it's less and less precise. So my track record, even on the shorter term, sometimes I dabble with hourly candles and those smaller time frames, but honestly, they're tough. They're tough to play out. So higher trend, the trend is your friend. All those cliches are great. They're true. And like Jesse Livermore, he's like the one that's been quoted the most, right? You got to buy right and sit tight. And buying right for gold for me was some early birds they did in 2016. But once we broke out in July or June of 2019 above that 1350, that was the last buy right moment for gold. Then you skyrocket up. So even if there's a pullback after that, you're still in the green, right? You're not stressed, you're not worried, you're not over leveraged. A lot of people jumping on now, the problem is, which I don't like, is they're going in over leverage. And these guys, if they start getting margin called because there's a correction, because they were greedy and they want to go to the moon, then they might create like this pyramid effect, right? They're getting margin called, and then after that, they have to sell, they have to cover, and then it creates like a correction all the way down. But if you're contrarian to that and you got in early, you're actually going to have enough capital to be able to buy those dips, right? Buy the pullbacks when everybody's fearful. So you kind of feel when you're on the good side of a trade is when you're that person who bought in early, who was contrarian right at the good moment when it turned, right? You don't want to be contrarian just to say, I want to take the opposite difference. But when it's backed by weight of evidence, by the charts, when nobody likes gold, you try to convince people in your family to buy gold and silver, and they're like, what are you talking about? I want to put everything in a Tesla or whatever. That's a good sign that you're getting in early at a good moment. And then whenever there's those pullbacks right now, you could add on. So if you're not a trader, you keep your core position. And then after that, when there's that pullback to that 1-year moving average, then you're able to add on. And the earlier you do it in the trend, the better it is, right? Because the longer the trend stretches, you never know when it's going to stop or something macro is going to change. And then after that, it's going to go tumbling down. You want to get in pretty strong at the beginning, add on the first few pullbacks in that trend. And then after that, start selling into greed. So when you really stretch away from that 12-month moving average, when you have a crazy wick on those candles there at the end of a trend, you're going to start wanting selling to that. But Leo, we're not even, for silver, we're not even close to that. If it's going to mimic like it always did gold, so every time gold did a new high and reach its new high, its previous highs, silver always did the same thing. So just like gold reached 1900, silver is going to eventually reach that 50, 58. So it all depends on your position size. Are you a trader? Are you over leveraged? If you're none of those, then it's for me the coast is clear. It's still clear even at 20 right now.
So quick question: why are you saying 58? What is 58 on silver? I saw that that you said it previously on another interview. What is 58? Why is 58 important?
It's every time you try to establish targets, you can't. It's like I try not to set them in there's multiple ways to set targets. So people do swing rules. They measure from a low to a high. That delta, once you break out, you add it on top, and then the 58 was actually not a percentage measure move, but it was a nominal measure move. So on my yearly chart, from the bottom, I forget at the bottom of that formation, maybe $4 or $5 silver up to 31. I think it was like 27. You add that on to the 31. So if ever we have a yearly close above $31, you add that on top, and that's the measure move to $58. So that's one target. You put that in your weight of evidence. Then you could have other type of measure moves. You could use Fibonacci extensions, etc. And if they all pretty much give you targets around 58, 65, you'll hear that around, like that's a target pretty much going around, then you know you have a confluence of people looking there. They're probably going to want to take profits at those targets. So those are usually targets that you could reach, and then you expect maybe a pullback once you reach those.
So that's actually smart to see where other people are seeing the price targets, and that's where you know you have a much more risk. And I also like the idea of a core position because that's the way I approach precious metals. And I can talk about that a little later because I have a question to you about that. But before that, I want to ask you, in technical analysis, there are charts that are 50% probability, 55, 60, etc. The highest probability that I know of in technical analysis is about 85%, something like that. So these are very asymmetrical bets that are great to take. We actually, in our newsletter, we showed that the range for the last 4 years was between 20 and 14, creating a range of about $6. So if it breaks above the 20, it can go to 26. And literally a few days later, it made that move. What is the highest conviction chart or pattern or analysis that right now the charts are showing, not long-term, but something that is in the next 12 to 18 months looks amazing, either gold or silver?
Well, silver, it's you could just on a monthly chart, so that's pretty good to get a 6 to 12 months projection. There's like a vacuum, like there's symmetry always that happens, and the precious metals complex symmetry in the charts. It's like people love it because they respect very much the classical charting patterns, human emotions. It's pretty pure type of complex to do technical analysis, and the angle of entry. So when silver crashed down from that 2013, it went down violently. So the faster it goes down, there's not many people that are able to buy or sell at those areas. So people call that a thin zone. I call that a volume defined vacuum. So once you go back down at the base, and then people think it's fair value, and then the bulls and the bears they fight it out. That like that range you told me there, like for a long time we were in that range. People fought it out, create a lot of resistance and support, the confluence of the whole mix. But once the market decides, okay, we're done with that, we think the macro drivers, like let's say inflation and growth, they're starting to go upwards. Silver breaks out above of that. But who's going to sell? Who are the previous buyers that are going to sell? They're already the everybody that wanted to sell sold in that base, in that 6 7 year base, like that expression that comes back. The bigger the base, the higher the jump in space or something. Sorry, I just massacred that famous expression, but all those people are out. So when you go back out, there's not many people that sold or bought on the way down that want to sell. The people that didn't sell, they're probably still holding all the way up to that 26, that 27, right? So either they held there or they sold at the bottom. So now you get a vacuum. And that's why I was surprised when I saw those 7 8% moves for a few days. I was like, I've never lived that. Like silver, I thought the lock limit was 3 4%. You couldn't get bigger move than that. And just the ferocity, the momentum of it breaking out, it's exactly what happened in technical analysis. And you could see in all those other charts, Lior, look at gold when it broke out. It went pretty fast up to 16 or 1560. The gold miners, it's like pure technical analysis. Angle of entry, base, angle of exit, usually pretty much the same. And that's what's happening for silver. And that's why I think there's still a vacuum to bring us up to now we're having a small pause to actually 27, 29 area and maybe overshoot to that 31 level. And then we're going to start hitting that resistance. It's like somebody told me back, wow, like resistance and support, people think it's like these severe lines, but it's more like it's more fluid. So you pierce through some resistance and then you get knocked down. Then you see that in the wick of the candle, but eventually you land on the true resistance. But it's like when you dive in the water, right? You try to push a balloon down right below support. Eventually, it's going to pop back up. So that's where you get that volatility. People get shaken out, or they think they have a breakout, but it's not a breakout because they were looking on smaller time frames. And for that 26 target, you see you did a different way of measuring it, and we're coming pretty much about at the same area. So that's a high conviction for me that right now at the 22, it's a natural pause, but we still have a vacuum all the way up to the base of that 2013 breakdown.
And Patrick, are you also involved in the silver and gold stocks, or are you trading only the spot prices?
No, so at the beginning, I go into the metal. Gold was the first one, right? The first one breaking out was gold. You go in the metal, then you wait because since there's a lag after before the miners, they break out. And once gold, the metals broke out, and silver's really about to break out or breaking out. Even I had the silver breaking out on I think the June or May candle. It broke out above 17, and then it consolidated above 17 on its way to where we are now. You have to go in the miners if you wanted to. Miners give you a lot better returns from what I've analyzed. For let's say SILJ was my warhorse. So what I saw it did in 2016, outperforming the other mine, the SIL or outperforming silver. That's like really where we want to go when it's hot. And as long as the SILJ outperforms the metal, you're really in a precious metals complex bull era, and that's where you want to maximize. I took SILJ because it's a basket. I don't have to worry about a CEO running away with his secretary or stealing the shareholders' money. I know a lot of people like playing those smaller. They call them pet rocks, like these smaller penny stock plays. SILJs for me was a good compromise of zero hassle, one chart to look at. But if some people are really good at it, they could actually take those components, those silver miner charts, and look at them individually and actually take the best performers, the best looking charts within them, and overweight a portfolio on those charts. But that's a choice of the time you have or what you want to analyze to maximize your returns. So baseline SILJ, and if you want to do a little bit better or try to do better, you could try to choose the best of the best from that crop of stocks.
Understood. So you're basically you're looking at the ETF, you're getting a basket, and if you want to, you can look at the components of the ETF, and then pick and choose within that, trying to beat the ETF or the index. I want to ask you about what's driving this performance for silver, because silver has in the last few years, the silver miners have been able to mine silver for between $12 and $15 an ounce. At these prices, silver miners are creating some very, they're creating amazing gains. Because silver is half industrialized, or half of the demand is industrialized, many of the companies that are needing it for their products may have a problem with these sort of prices, and obviously are putting pressure on the miners to sell it for cheap. And then on the other side, you have the bullion and the ETFs, and those are willing to pay more. How, with the surveys and sentiment that you're looking at, for the average person, I think that most people are comfortable paying much more for their silver if they're buying it as a hedge, as an inflation hedge. They're buying the physical to buy a few ounces of silver, 4 or 5 ounces, 10 ounces of physical silver at 25 or 35. For most people, that doesn't make, it's not a deal breaker. So can we see a situation where silver very fast on some sort of a global event, some sort of a disruption, let's say with the elections, etc., that it goes overnight from 25 to 30, or from 25 to 28, from 22 to 28, big moves that are overnight moves that we wake up in North America and don't understand what happened in the Asian markets, etc.
Yeah, the silver's proved it could do that, right? And that's actually the way it behaves. So when I look at some charts, sometimes we like to look at horizontal breakout lines. We give them more value than slanted breakouts. But silver is a wild horse, just like you explained. I've noticed that if you want to catch the early move in silver, you have to look at the diagonal trend lines, right? When it starts breaking out, it moves fast. If you wait for it to have a horizontal breakout, a lot of the move is gonna already been done. And silver, yeah, a while back when I started in the precious metals complex, I was trying to figure out silver, is it commodity, and like you said, industrial, is it monetary metal? But from what I've gathered in my research, it's like you said, I think it's I don't know, 50-50, but it's definitely gets the boost from the inflation, like the same macro drivers as gold. So it gets that boost, but it also gets a second boost from industrial demand, inflation expectations, and growth. I think it's all about expectations before the growth happens, before the inflation happens. Right now, you see silver exploding, but inflation is still barely creeping up. We're having a snapback in inflation, but it's actually, I believe, sniffing out potential inflation growth. And I don't know, maybe some other guests you have a better understanding of the size of the silver market and why it moves so fast. Is it because it's so small, and as soon as there's a little bit of capital flows going inside, it just unleashes that buying pressure, and it just goes like maniac, right? Goes up in the direction. But silver could definitely do that. I just had fun. I looked at the 1970s bull market for silver. For days after days after days, it was locked limit. So it went up 5-6%. The day's trading happened in half an hour. That's it. Everybody go home. day after day, there was no range. It opened at a high price, closed, and it did that day after day after day. So I try not to focus too much on that because that's like gets the greed in me, you know. Like I say, oh man, we're gonna go to 50, 58 next week. So I try to always, the more my greed goes up, the more I try to find reasons, more charts that could calm me down, you know. But look, Patrick, China, the Chinese market's not looking too good right now. Their industrial demand. What if they don't bounce back up? Is that going to hurt silver? So I try to always like calm down my expectations. But silver, in the deep down inside of me, I know that silver is a wild beast. And from the charts I've seen, it could easily keep going on a tear that overextend those indicators, overextend everything, that all the signals that people will tell you to sell. It could actually surpass that, your wildest expectations, and then you're lost. It's like sometimes I say I can't trade silver because I won't know how to handle it once it just goes crazy, right? I want to take profits. So that's why the core strategy, the core position, and you don't sell no matter what, that part of it is a pretty good strategy. And especially since it's aligned with the long-term charts, you're pretty safe bet. Like those people are willing to pay $20 or $30 for silver bullion. They're good. With whatever's coming up, the charts are saying that we're going to keep going up and up. I have some log targets. So on charts that are log scale, I even have some targets like 260, 250 for silver. I try not to mention too much of those targets, but those are some valid technical analysis targets when you base it on percentages move that I did, like let's say from the $2, $3 all the way to 35 or $40 log percentage wise. If you add that move on top, you get these big targets. And that's pretty much where we're going. So silver bullion, you buy that physical, you're a holder. You're not even going to think about selling that. But if you want to day trade or swing trade, then that's when you got to consider those pullbacks, because silver, as maniac, it could go up. The corrections are 20, 30%. And if you over leverage, they're going to be hard to handle those drawdowns.
Patrick, because silver's correlation with the dollar is very much inverse, much more than gold's. Silver is much more susceptible to dollar strength, and it moves much faster on a dollar weekend. Do you also look at technical analysis for the US dollar versus other fiat currencies right now, or have you done this lately?
Of course, you have to. The US dollar is critical in commodity. So in the commodity bull markets, it's inverse relationship. So you look at the DXY, you look at the gold to silver ratio, and you look at the VIX. All those charts, they're practically identical. So when the VIX spikes up and people start selling equities because they think there's going to be a market crash, whatever, they convert to US dollars. US dollars goes up, but they also sold some of their silver bullion. They also sold some of their silver stocks. So silver goes down. But as soon as there's stability in the markets and the VIX starts going down, silver goes up. People are selling their US dollars to buy US equities, and the whole cycle restarts in favor of silver. So I definitely look at the US dollar, and when I see the US dollar that's about to hit support and about to maybe have a rally back up, so bear market rally within the dollars going up, going down, but the bear market rally within it, you could be heading into a correction for silver. So those on the shorter term, those are charts I look at. Is the VIX going to bounce back up? Are we going to have a little period of volatility, US equities volatility, markets correcting? Then silver will correct, and gold to a lesser extent, they will correct somewhat. But I see that as fear entries. So they're going to give me nice opportunities when everybody's selling to those corrections. I'll be trying to add some more on those pullbacks.
Patrick, what do you do on Twitter? How can people follow you, and what's up with your routine, basically?
Every time I have an idea in my head, I send myself an email because there's so much stuff brewing in my head. And then when I have time, I go on my trading view. I do the chart. I try to put as much detail in it, and then I post it on my Twitter. it's hard, in a small description, sometimes to pass the message. Sometimes the chart's a little complicated, or even sometimes I'm not quite sure what I see in the picture. And it's like when you add all this weight of evidence, eventually you see a bigger picture. So I always I post it on Twitter, and sometimes like maybe once a week or every 2 weeks, I do a podcast on my YouTube channel to try to put the words, like when we communicate, it's a lot easier than just with a 100 character or 200 character tweet. And then I try to really explain my thoughts behind what I see on my podcast. So I think that the verbal combined with the ideas on Twitter, it gives somebody who wants to look at like a global picture of the precious metals market. It gives you a pretty good idea of how I see it. When you see me jittery all the time on Twitter, and I say I'm trying to give like bearish signals, and I'm seeing stuff, it's because the price action is probably slowing down, and or we went up pretty high, and I'm just trying to see where the next leg up is, and until I find like the next, I call it like the whale moment, where I'm on the hunt for like the whale, like the big move, and that was like for silver was a little while back, that before it broke out, but eventually it's going to correct, and we're going to get close to the moving average, and call that the next whale moment, where we're going to be able to increase our position size, our core position size, and profit there from that the rally back off that correction, off to new highs, surpassing previous highs, keeping going higher. It's always a question of making higher lows, right? Higher lows, higher highs, and trying to get in when those lows, those corrections are happening.
Definitely. And what I love is that so long as gold is below 2000, this is not going to mainstream. You ask people about silver, unless you're in the silver community, you don't even know that silver is at 23 right now. It's not popular. It's not a popular headline. And even though it had the best week in 40 years. So to me, this doesn't smell and feels like 2011. It feels much more like 2010 or maybe late 2009. It's just the early moves. And obviously, there's lots of ways to look at gold. But I think the best way to think about gold and gold's real value in this kind of economy is to see how much of the currency supply it covers. And gold is covering less of the currency supply than it did in 2000 when it just started its 11-year bull market. So I want to thank you for being on the show. People should follow you on Twitter. On Twitter, can they find your YouTube channel as well?
Yeah. So I think it's in the details. So if you're not sure, it's just youtube.com/Patrick Karim in one word. And if ever I do a new podcast there, I post on Twitter, and they'll get it, or they could just go to my YouTube, subscribe, and whenever a new one comes out there, they'll be warned.
Perfect, Patrick. Hopefully we both see major moves here, and and listeners as well. So thank you very much for being on here today.
I wish you well, Lior. Thank you very much for having me.